Time now for Futures in Focus, Vonnie. The Swiss franc had a little bit of a flash crash last night. Light liquidity, Japan is out. Scott Shellady of TJM Investments joins us now. Scott, let's kick off with that issue of the flash crash overnight. Are we just going to have to get used to this kind of thing? You get a little light liquidity overnight, and some of these currencies bounce around all over the place.
Yeah, I think I put in my notes to you that, tech's great until it isn't, right? We all love technology, and it's done a lot of good things for the industry, but sometimes there are some negative consequences, and this is absolutely going to be one of them, and it's not going to go away anytime soon. And to your point, it's going to be happening more and more often. And so what investors need to do is accept the fact that it's going to happen more often, and instead of being afraid of them, we need to embrace them. And what I mean by that is this: be ready for them to happen and have some sort of powder dry or have an idea on the table that you'd like to implement when and if these things happen, so that you can start to take advantage of these commodities and stocks when they go on sale real quick in the middle of the night, rather than be afraid of what it might do to your portfolio on a day-to-day basis.
The problem with that, Scott, is that you end up getting stopped out. Moves like that can kind of blow through most of your investment limits, either one way or the other. I guess that's the problem that some people find themselves with. They wake up on a Monday morning here in Europe and find that they've been stopped out of their positions out in Asia.
Well, those that have those, yes. I mean, there's going to be those. You're going to be stopped out of a position you already have. But I'm saying, look, if I want to buy something 5% lower and I haven't ordered in to do that, then I should be happy with that order being triggered at 5% lower. And so it's an initiating trade rather than a defensive stop loss order. So without getting too much in the weeds, there are ways to reap benefits from these things rather than just be afraid of them. You should have stop losses on your positions that you have in the market as we speak. But if you're looking to initiate and buy things cheaper, there's nothing wrong with having something in below the market at 5%.
Scott, let's talk about what's happening in the crude market right now. I'm wondering where the next catalyst comes from for crude to get it moving. We seem to be being moved around a little bit right now by the currency market, but I'm wondering what is happening here. Is it Iran waivers that are going to move us around? Is it OPEC Plus extending? I'm wondering how much of this is in the price and where the catalyst comes from.
Well, we got off to a great start this year, obviously. And I think that, a lot of that stuff that we had happen in the last part of last year, the last 6 weeks, was because traders did get behind $80 oil and they got behind a 4% 10-year yield, right? Well, those two things went horribly wrong, and the market kind of imploded on itself, and you saw what happened to the equity markets as a result the last 6 weeks of last year. So now here we sit. The damage has been done. You look at a chart, 42 and change is low for crude at WTI. I say that we're going to probably stay in this lower, slower, longer period because we've got some tensions with China still overhanging the market. And even if that does get better, that probably won't change the IMF and their expectations of global GDP. As long as global GDP looks to slow and the U.S. still has a lot of supply, the next catalyst for the up move is going to have to be something tumultuous, like some sort of geopolitical issue in the Middle East, because right now, with the supply issues and global growth issues, it's just going to be hard for oil, I think, to really get itself up the mat.
In terms of the more domestically focused issues over there in the United States, what are you seeing in terms of problems there? The Permian is pumping like there's no tomorrow right now, but clearly there's an issue with pipeline. Any kind of sign that that's going to change anytime soon?
No, I don't think that'll change anytime soon. I think what we have to worry about is our growth. I think that's really going to be front and center because obviously we've got China. I hate talking about it. It's getting old now. But at the same time, with everybody else slowing down, the billion-dollar question this year is going to be, can the U.S. go it alone, or how much does the rest of the world slowing down affect the U.S.? Now, on top of that, we've got the Fed that have gone dovish on us here, right? And the last jobs number after the Fed went real dovish was really good. So we might have there might be some tumultuous times with what's happening in the fixed income market that will eke out into commodities because of the dollar, because right now we run the risk of turning the Fed into the Keystone Cops and chasing their tails around because they've gone all dovish. At the same time, we've had some good news. So keep an eye on the U.S. economy against everybody else's, what that does to the dollar, and I think that's what you might have as a catalyst for the next big move in oil.